Our market monitor tonight is looking to the global economy for his returns, and he's recommending 3 ETFs. This is his first time on the program, so we welcome Scott Kubie. He is the Chief Investment Officer at the Carson Group. Welcome, Scott. Nice to have you here.
Thanks, Sue. Glad to be here.
So you see the global growth picture as perhaps more compelling or equally as compelling as the U.S.?
Yeah, I think we've seen a real upswing globally, not just in the U.S., but Europe, which had great growth last year. We also saw Brazil come out of recession, strong emerging market growth out of China, solid growth in India, and Japan put out pretty good numbers for Japan as well. So it's been a real surge, and we think that's going to adjust the opportunity set in the investment landscape quite a bit.
All right, so let's start with your first pick. They're all 3 ETFs. The PowerShares International Buyback Achievers. Why do you like that?
You know, this is probably the most interesting one of the 3 in that it focuses on the international markets directly. International markets are cheaper than the U.S., so we like that right off the bat. But we also realize that international stocks aren't quite as shareholder friendly as they are in the U.S., and so we want to focus on those that are. And one of the ways that they can be more friendly is buying back their shares. And so we zero in on those types of companies. Because interest rates are still a lot lower overseas than they are in the U.S., the cost to buy back shares is actually quite a bit lower. And we saw the same strategy work very well in the U.S. a number of years ago. We think it translates well overseas right now.
All right. The next one is the iShares Edge MSCI Value Factors ETF. Tell me about that.
Yeah, as the economic recovery starts to broaden, we just see that the number of companies that will benefit from it will widen. This market has really been characterized by a narrow set of growth companies doing extremely well. But as growth kicks in, we see more companies are going to do well. And so we want to own value stocks. We think those are going to have a solid rebound after years of growth outperformance. One of the big changes, though, we want to see within value is do you really want to have a big sector emphasis that often comes with value? So this ETF is sector neutral, and it's going to have the same amount in technology as the overall index, the same amount in staples. And we like that mixture of emphasizing the cheapest stocks, but being balanced across every sector that's out there.
All right, let's wrap it up with the Fidelity MSCI Financials ETF. Why do you like that?
Yeah, I think financials have really suffered through the recovery. They haven't done as well coming out of that financial crisis, which you referenced earlier, over the last 10 years. And so we see some big opportunities in this space, but we see some specific benefits from overall global economic growth kicking in. One of them is loan growth has been really slow during this recovery, and so we see an opportunity for that to kick up, and also see the fact that long-term interest rates should rise, and so we should see banks being able to earn more on the loans that we're making. We really see that financials and those loans will be likely to pay off as long as growth continues to stay strong. So this seems to be a sweet spot for financials to take advantage of the global economic growth and really benefit shareholders.
Okay. Scott, thank you very much. Scott Kubie with the Carson Group.